Dear friends, welcome to Weekly View on Markets. Wish you all a very happy Dasara festival. Nifty has traded in the range of 400 points for this week and it has closed on the lower side of this band at 19,542. Next support level for Nifty is at around 19,300 to 19,400 level. There is pressure on the market due to geopolitical developments globally, especially with respect to Israel and Hamas war. And also, due to this, the bond yields in the US are rising. It is almost touching around 5%. So, this is causing pressure on the Indian markets and also all other global markets. The charts indicate that further consolidation is likely to happen in the markets. Our market is not correcting in a big way, even though there is war situation globally. So this is good for our markets. Let us look at performance of various indices during this week. Nifty has closed at 19,542. It has lost about 208 points, closed with a loss of 1.06%. Bank Nifty lost about 565 points, that is 1.28%, and closed at 43,723 level. Bank Nifty has broken the crucial support level of 44,000. Mid-cap index has lost about 627 points. That is lost about 1.55%, closed at 39,878. Small cap index has outperformed all other indices. It has gained about 34 points for the week, closed at 12,927. That is 0.26% up for the week. India week is at around 10.81. Let us look at performance of various sectors. Most of the sectors lost during this week. Only auto sector gained about 0.32%. Oil and gas sector lost about 2.19%. Consumer durables lost about 1.83%. FMCG, PSU banks, commodities, infrastructure, metals, NBFCs all lost around 1 to 1.5%. Manufacturing lost about 1 point. Manufacturing lost about 0.86%. Pharma and healthcare lost about 0.90%. There were more declining stocks than the advancing stocks during the week. Now let us look at the charts. This is the daily chart of Nifty. As we can see, Nifty has got support at around 19,300 to 19,400 levels, and Nifty has got resistance at around 19,800 to 19,850. Nifty has to cross 19,800 to 850 level. Then the Nifty can go to the previous high of around 20,000. So till such time, the Nifty is likely to consolidate in the range of 19,800 and 19,300 levels. This is the chart of Nifty Midcap Index. Here also we can see support for Nifty Midcap is at around 39,400 level, and the resistance is at around 40,700, 9,800 level. And by looking at the chart, I feel that Nifty Midcap Index also will consolidate for some more time. This is the chart of Nifty Small Cap Index. Small Cap Index has got good support at around 12,800 levels, and it has faced resistance at around 13,100 level. Till this resistance is taken off, the mid cap index is likely to trade between 13,000 and 12,700. This is a chart of Bank Nifty index. Bank Nifty index broadly is trading in a range of 46,000 on the higher side and 43,500 on the lower side. Now, Bank Nifty has come to the lower side of the support range. So traders can look at buying Bank Nifty at these levels, and when it crosses around 45,000, they can think of booking the profits. Now let us look at some of the fundamentals of the market. WPI inflation index for the month of September has come out, and it is at minus 0.26%. As we can see in the graph, the wholesale inflation is continuously dropping from a high of 8.67 in October 2022. It has dropped to minus 0.26 in the month of September 23. So accordingly, the retail inflation also we have seen a drop. It gives a confidence that the inflation is under control in India. RBI dollar reserves is at 585.89 billion US dollars. It is up by 1.15 billion US dollars for the week. Rupee is slightly recovered from the lower level and closed at 83.12. Dollar index is steady at around 106.15. Gold prices have slightly moved up and crossed 60,000 level and closed at 60,725 for 10 grams 24,000. Crude price is at $92.51 per barrel. This is a concern for Indian economy and also for the stock markets. This is one of the factors causing pressure on the stock markets and also oil and gas sector. This week we have seen oil and gas sector has lost more than 1%. That is due to the crude price going beyond $90 per barrel. Higher crude price is not good for Indian economy as well as for the Indian stock markets. FIIs have sold 2,798 crore during this week. DIIs have bought 3,511 crore in this week in equity. FIIs are selling off in emerging markets due to high bond yields in the US. The bond yields have almost touching nearly 5% in the US, which is a record level in the recent many decades. So, because of these high bond yields in the US, FIIs are finding it attractive to invest in US markets and they are selling off in the emerging markets. And India is also one of the emerging markets. We see money moving out of Indian markets also. But the DIIs have been continuously buying and they are putting more money into the markets at every dip. That is how there is stability in the Indian markets. Quarterly results declared so far are good. They are meeting the street expectations, but there is no big surprise on upside. So that is why we see, market is under pressure and it is not going up considerably. And Israel Hamas war situation so far has no big impact, but a prolonged war can disrupt the global supply chain and which can again cause inflation globally. That is a worry for the markets. Because of strong macroeconomic fundamentals of Indian economy, markets are not correcting in a big way, but the upside is limited. That is why I am saying Consolidation in the market may continue for some more time. If there is any sharp cut in the market due to some global development, it will be a good buying opportunity for Indian investors considering next 2 to 3 years horizon. I request investors to stay invested and should not get worried about the volatility. Indian macroeconomic fundamentals are quite good and the GDP growth is also is going to be more than 6%. We can benefit from India growth story. So please be remain invested. Continue your SIP investments. All the best. Happy Dasara. We'll meet again next week. If you like my channel, please subscribe to my channel, share with your friends, and you can ask your questions, which I will reply. Thank you.